All right, let's talk about a stock story that has just completely blown Wall Street away. We're talking about SanDisk, and its incredible surge has everyone asking the same question. What in the world is going on?
So it really all kicked into high gear on what seemed like a totally normal Tuesday. And then, bam, this number. A jump of nearly 22% in one day. Now, you have to understand, a move that big for a company of this scale, it's the kind of thing you only see with like a massive buyout offer. It's not normal.
And that one-day pop, it sent the stock flying to a price that honestly nobody thought was possible. It closed at an all-time high, almost $335 for a single share. Just incredible.
But okay, as crazy as that is, this next number is the real showstopper. For investors who got in on this early, we're talking about a jaw-dropping 830% return. Yeah, you heard that right. In less than a year, SanDisk went from being this kind of sleepy spinoff to the absolute superstar of the market.
So that's the big question, right? What is happening here? How did a company we all know, a memory company, that's, well, not usually the most exciting stock, how did it suddenly get here this fast?
I mean, just look at the timeline. The speed it's breathtaking. Back in February of 2025, SanDisk gets spun off from Western Digital for just $36 a share. Pretty humble beginnings. A few months later, it's already grabbing more of the market. Then, boom, the big one hits in November. It gets added to the S&P 500. And from there, it was just a 2-month rocket ride to that all-time high. We're talking about a meteoric rise in every sense of the word.
Now, something like this doesn't just happen by accident. It's not a fluke. What we're seeing is what analysts are calling a perfect storm of good news. And at the center of that storm is the one thing everyone is talking about, AI.
Okay, so what were the ingredients of this perfect storm? Well, it's this mix of huge market forces and SanDisk's own smart moves that really lit the fuse. First, you had competitors basically screaming that memory prices were about to go through the roof, like up to 70% because demand was just insane. Then, remember that S&P 500 inclusion? That forced all the big index funds and ETFs to buy millions of shares, no questions asked. And on top of all that, SanDisk's own tech, this new, super advanced 3D NAND memory, was exactly the thing that the giant cloud companies were desperate to get their hands on for AI.
And this really gets to the core idea, the big shift in thinking that's driving all this. You know, everyone talks about GPUs, the brains of AI. But think about it. What good is a brain if it can't access information quickly? Those powerful GPUs are totally useless if they can't get their hands on massive, and I mean massive amounts of data at lightning speed. So it turns out AI isn't just a computing problem, it's a storage problem. And that's where SanDisk comes in.
Okay, so the story is incredible. The hype is real. But let's take a peek under the hood at the actual numbers. Do the company's financials actually back up this insane stock price? And right away, you see something really interesting. The top-line stuff looks pretty good. Over $2.3 billion in revenue, and their debt is super low, which is always a great sign of a healthy balance sheet. But then, you look down at the return on equity, and it's negative. And that's a huge deal. It basically means that even with all this excitement and investment, the company isn't actually making a profit for its owners yet. The stock price has just run way ahead of the actual earnings.
And that right there brings us to the other side of the coin, the argument from the skeptics, the bears, who are saying, hold on a second, has this all gone too far, too fast? They're worried the stock has gotten way ahead of itself. And this chart really shows you what they're talking about. It's the PE ratio, basically how much you're paying for the company's earnings. SanDisk is trading at a multiple of around 21. That's more than double its main competitors, Micron and SK Hynix. So the question becomes, is SanDisk really twice as good as those guys? Does it deserve that massive premium? Another huge risk here is a word you hear a lot in this industry, cyclicality. The memory chip business is famous for these wild swings. It's all boom and bust. Demand soars, prices go to the moon, everyone's making money. And then, inevitably, supply catches up and prices crash back to earth. So the fear is, what if this incredible AI boom is just another boom part of the cycle? The bust could be pretty painful.
And this quote from Tim Bowen really sums up that cautious mindset perfectly. You know, once a stock has already gone up 800+%, the game totally changes. It's not about finding the next big mover anymore. It becomes about managing your risk, because when a stock goes up that high, that fast, it can also come down just as quickly if the story changes.
So where does that leave us? We've got these two totally opposite stories, right? On one side, you have this insane, can't-ignore-it growth.
all fueled by AI. And on the other, you've got these really valid concerns about the price tag and the industry's history.
And this slide lays it out perfectly. The bull versus the bear. The bulls are saying, look, AI isn't a cycle, it's a revolution. SanDisk is selling the picks and shovels in a new gold rush, and their tech is the best. But the bears are firing back, saying, the valuation is insane, this industry always goes bust eventually, and what happens when this initial AI build-out is over?
And that's the ultimate question, isn't it? The question that has Wall Street completely split and makes SanDisk one of the most fascinating stocks to watch right now. Is this company building the actual permanent foundation for the future of AI? Or is it just the most expensive stock in a temporary, even if it is spectacular, gold rush? That is the multi-billion-dollar question.